Hey everybody, thank you so much for checking the channel out today. Great video from Economics Nation here. Can the U.S. print money forever? And why hasn't the U.S. experienced hyperinflation? We'll take a quick listen to see what they have to say. I'll add my 2 cents here along the way. Thank you so much for checking the channel out today. My name is Agabus. This is your financial education channel, and let's get into it.
The creation of money by governments and their central banks becomes a very appealing solution, especially in times of severe economic crises such as the one the world experienced in 2020 due to
Another reason why it's super easy to print money and expand the money supply, some would argue that it's a lot easier to do that than it would be to tax the citizens for the projects that the government wants.
a pandemic. But history has shown that printing money in excess almost always ends badly.
100%.
You don't have to go very far back to know the consequences of turning on the money printer. The best known and most recent
Images like this, I think, are phenomenal to show the dangers of hyperinflation. A lot of Americans, a lot of people in developed countries, first world countries, have never seen these and have no idea what this actually means. But a lot of people can see some of the pictures from the Weimar Republic, Germany, when they experienced hyperinflation and you had to have wheelbarrows full of money to buy a loaf of bread. There's a lot of countries that are going through that right now. So pictures like this are phenomenal to see.
example is that of Venezuela, where public spending began to be financed by the central bank with the issuance of banknotes. The result is that Venezuela experienced hyperinflation for more than 4 years. The country closed 2020 with an inflation rate close to 4,000%. And
Again, US folks, the inflation rate, if you didn't hear that, was 4,000%. If you thought 10% was bad last year, imagine how spending and behavior in life changes when you have inflation of 4,000%.
this happens because if in a country there is a certain amount of goods, and in a short period of time the amount of money in the economy increases, prices will increase because there is much more money than before, but the same amount of goods.
And I think that's the biggest distinction that people don't have. Inflation is not the problem. Inflation is the result of the problem of printing money. When people see all the inflation that's happening, they say, oh, it's awful, but they don't know the actual root cause of it. That's where you get into troubles, and that's what this channel is here to help people through.
Let's think that most companies and factories cannot increase their production capacity immediately, so the only alternative to an increase in demand is to raise prices. The consumer tries to anticipate the price increase and quickly gets rid of money, so the central bank must print more bills because they are used faster and faster, which generates higher inflation, and this cycle repeats itself.
Once a country starts to experience hyperinflation, and you can see this all over the world, all over the course of human history, it is very rare for the inflation genie to get put back into the bottle. Now, I'm curious to see what this video will say, because the only reason hyperinflation hasn't been experienced in the U.S. would be twofold. Number one, we export a lot of that money, so we are the world reserve currency. We use our money to buy a ton of export. So that dollar bill, if it had stayed internally in the country, would have created the hyperinflation, but we buy stuff from other nations, so we export the dollar. And number two, the reason why we don't see it is because the dollar is the world reserve currency and everybody wants the dollar. If this was another country that had a currency that was not the primary reserve, then inflation can run amok very quickly.
Now, the question is, if the United States has issued trillions of dollars in 2020 and 2021, why has it not experienced hyperinflation?
Let's find out.
What is the limit for the United States to stop printing money?
The answer to that question is when other countries stop buying our dollars. They stop buying our treasuries and start using other currencies. Gold, the yen, silver, Bitcoin, etc.
Until a few decades ago, the issuance of paper money was backed by precious metals such as gold, precisely to avoid abuse of that power to print money. This is known as the gold standard. This system demanded greater monetary discipline because the money supply set by the central bank corresponded strictly to the value of the metal reserves kept by the bank.
That was probably the most important spot right there, that the gold standard was a barrier to printing money, but was also a barrier to government expenditures, to government going into debt. So the gold standard, although some would say it's limiting a country, it actually created fiscal responsibility. So as soon as we went off the gold standard at 71, things really started to go haywire.
So anyone could go to the bank with that paper and exchange it for gold. Until 1971, there was a gold dollar standard, in which the United States was committed to support the dollar in relation to gold, and in turn other currencies were linked to the US dollar. In other words, if a banknote of a certain value was printed, it was because the bank had its value in gold as a backing. However, the US began to have problems financing the Vietnam War and started to print much more money than it could actually back up with gold, which is why the US decided to abandon the gold dollar standard. From that moment on, currencies would be backed only by the confidence that the whole world gives to the paper issued by central banks. The United States...
And that's a hard pill to swallow right there. The only thing backing the US dollar is the confidence of the US dollar. If the confidence of the dollar starts to break down internally or in other countries, then there's nothing backing that dollar. So there's no one to say that, well, no one's going to use the dollar, we'll use something else. It is entirely on the confidence. And if the confidence comes down, then we're going to have a lot of transitional period, let's just call it.
Could now print money without the need to have its value in gold, so it is not strange that, as if by magic, the Federal Reserve, the central bank of the United States, prints billions, or rather digitally creates money, and injects it into the market in a matter of days.
Injecting money into the market is also a good point. Sorry to keep interrupting this video here, but another issue with the printing of money and creation of debt and having a centralized system dish out that new dollar is when the central power, such as a government, dishes out the money, typically it goes to places that are very inefficient versus the free market or general people buying and selling and trading amongst themselves tends to be more efficient versus just plumping money here and there that the government sees fit.
For example, it is estimated that in 2020, in just 3 months, the Federal Reserve injected $3 trillion into the economy. That money could buy all the goods produced by the United Kingdom in a whole year. This, bearing in mind that this figure only corresponded to mid-2020, but the trend of printing money continued until the end of 2020 and the beginning of 2021.
It's still continuing.
In other words, the U.S. can get money out of thin air without raising taxes because the Federal Reserve prints money to buy debt bonds issued by the U.S. Treasury. Then, taking into account this enormous amount of additional money in the middle of a world crisis, that is to say, with less goods and services offered, how is it that the United States has not suffered hyperinflation?
Here we go.
In the case of Venezuela, when its central bank printed bolivars, all that money stayed in Venezuela. But in the case of the United States, since the dollar is the world's reserve currency, not all dollars stay within the United States, but are used in most countries and companies that usually make transactions in US dollars. In this way, the risk of hyperinflation is dissipated globally because US dollars are not only demanded in the United States, but also in the rest of the world.
100%. And there's an interesting argument called the milkshake theory. I forget the author who does that. But the milkshake theory says that the dollar will continue to become stronger and stronger, and it'll continue to become more and more in demand. And as the dollar becomes stronger and more in demand, other currencies, other countries' currencies will start to fall, and other countries will start to dollarize, meaning they will get rid of their central bank and their dollar altogether and only use the US dollar. Argentina right now, there's a lot of argument and conversation around their country being dollarized. And I think that milkshake theory, if you haven't heard of it before, is a very interesting one to look into.
And precisely, inflation in the United States had remained below 2.5% since 2012. And this low inflation is what had allowed the U.S. Congress to continue approving stimulus packages. The last one of $1.9 trillion, which included direct payments of $1,400 to the accounts of millions of Americans. That is why U.S. borrowing, backed by the Federal Reserve, is growing so much. government debt reached $29.6 trillion, 123% of GDP in
This video is from a year ago. Now that number is close to 34 trillion, soon to be 35 trillion.
2021. This does not seem to worry Democrats and most Republicans, for the simple fact that the U.S. is borrowing its own currency.
Both Republicans and Democrats, it's so true. It's like, which side of the coin do you have to vote for? They're both in cahoots in the same way to print the money. One party tends to just not print as much as the other,
i.e., paying off its debt with the same currency it can print. So, the other question is whether there is any limit to the money issuance and massive indebtedness of the United States. The limit could be that another currency begins to replace the US dollar as the world's reserve currency,
100%.
which is unlikely to happen in the short to medium term.
Correct.
Other limits are that so many excess dollars effectively start to generate inflation, and, in fact, this has already started to happen since May 2021. The inflation rate in the United States is the highest it has been in 40 years. For example, the inflation rate in May...
Have you been on social media lately? TikTok, Instagram, YouTube Shorts, X yesterday, inflation, the term inflation was trending and has been, because I don't know if these official rates are what actual everyday Americans are seeing.
May 2022 was 8.6% over the same month of the previous year. This figure, while still far from being considered even close to hyperinflation, is high for a developed country. The concern about this figure for investors, companies, and some politicians is that the Federal Reserve's inflation target is 2%. So, if inflation permanently exceeds its target, the Fed could raise interest rates to increase the cost of borrowing and decrease consumption, and, consequently, inflation.
To that point, the Fed does generally dictate the interest rate. However, other countries or institutions have to buy the treasuries when they get issued. They're called treasury auctions. There's another channel called Heresy Financial, which is a phenomenal job of discussing what treasury auctions are and what a failed treasury auction could look like. If other countries or institutions don't buy the treasury debt, then the interest rates do have to slowly go up as a part of a free market. So even though interest rates might be set at 5.5%, new treasury rates or new debt may actually be 5.51 or 5.53 or 5.6, depending on the interest of other people actually buying that debt.
This is relevant because an interest rate hike in the midst of an economic recovery can have multiple consequences. In theory, if the Federal Reserve raises interest rates and the commercial banks follow suit, it becomes more attractive to leave money in the bank because it is assumed that the higher the interest rate, the higher the yield. That is, fixed income becomes more attractive. And a consequence of this is that the debt bonds issued by the government will tend to offer higher yields. In other words, the government will have to pay higher interest rates to get into debt. The U.S. could simply print some more money to pay that higher interest, but that would imply greater inflationary pressure.
Makes it worse.
Another consequence of the rise in interest rates is the following. Since the Federal Reserve artificially kept the interest rate around 0% for so long, many companies went into debt and are now considered zombie companies.
This is a real thing and is a real problem, that a lot of companies are making money having a cash flow, but their cash flow has to go to service and pay off the debt that they accumulated with a low interest rate environment. So a zombie company is a company that's making money solely to pay for its expenses and its debt, but it's not actually growing or getting out of debt or doing better.
That is, many companies became addicted to cheap money and sustained themselves only by paying very low interest on debt. With higher interest rates, they could face serious financial difficulties or even go bankrupt. For these reasons, the issue of high inflation and the actions the Federal Reserve could take to contain it is so sensitive. So, high inflation is the limit for the U.S. to stop printing money and going into excessive debt. The question that remains is, how long can the rest of the world continue to rely on the U.S. dollar as the world's reserve currency?
Boom.
Thanks for watching.
And I think that question leaves a great question for everybody. If you haven't been following along, there are some countries, again, dollarizing, getting rid of their central bank and their currency. Some countries have had discussions about going back to a gold standard. You see countries like El Salvador and maybe Argentina try to go to a Bitcoin standard. And then you see other countries who are developing in the BRICS nations to maybe create their own competing currency as well. So there's a lot of activity and development happening here in the last couple of years. It'd be interesting to see where things play out in, let's say, 10 years from now. But I do think there are some rumblings that the US dollar may not be that world reserve currency for much longer. But you tell me your thoughts and comments here. When do you think things start to flip? What do things look like if that were to happen? Thank you so much, as always, for listening in today. Thank you for listening to the end. As always, stay inquisitive, stay informed, and stay subscribed for more. We'll see you tomorrow.